Melbourne or Brisbane in 2026? It's a question I get asked every single day. Well, today I'm going to end the debate once and for all, and it's not from my opinion, it is strictly by looking at the data. And I think when you see it, there is one clear winner for 2026. Hi. My name's Ben Carrington from Compound Property Buyers Agency, where we help clients buy high growth and high cash flow properties all across the country. Now, we've bought properties in both Melbourne and Brisbane, and we've seen what works, we've seen what doesn't, but today we're going to see which is the pick for 2026. Okay, so here's what we're going to be covering today. Firstly, we're going to look at what is the current sentiment with Brisbane and what is the current sentiment in Melbourne and why that is. Then I've picked 2 suburbs from Melbourne, 2 suburbs from Brisbane, and we're going to do a direct comparison across the data. All the data that matters, median prices, vacancy rates, affordability, and most importantly, the capital growth score out of 100. And finally, once we've looked at that, I will reveal who I think is a clear winner for 2026. Let's get into it. So the first thing is, why are Brisbane and Melbourne constantly being compared? Well, the first one is Brisbane has been one of, if not the best performing property market over the last 5 or 6 years. It started growing in 2019 and has not stopped since, and has done exceptional numbers over the last few years. It's also got, which I've heard 1,000 times, the Olympics coming up, which has driven a lot of positive sentiment into Brisbane. Then we go over to Melbourne. Now, Melbourne has been in the doldrums. It has had the world's longest COVID lockdowns in the world. It's got the budget deficit. It's had increased land tax, and as a result, it has been one of Australia's worst performing property markets over the last few years. In fact, Brisbane has now overtaken Melbourne as a more expensive city, which is incredible considering that Melbourne is usually the second most expensive city in Australia, but Brisbane has now overtaken it. So naturally, the question that everyone's asking is, does Brisbane keep growing, or does Melbourne have the ability to turn it around? Well, let me tell you the sentiment that I'm hearing right now. Firstly, Brisbane. The sentiment that I'm hearing is that it will keep rising. We've got the Olympics coming up. We've got the lifestyle factors, the better weather, all the positive articles in the news, and that is making people think that Brisbane is just going to keep on growing. Then what about Melbourne? Well, the sentiment's pretty down. Even all the people that I speak to that live there, they say the same thing. We've got government issues, we've got the deficit, we've got the higher land tax, we've got the rental reforms. It's all very, very negative. In the last few months, it has slightly improved, but overall, the sentiment is still very low. So as far as sentiment, Brisbane is clearly the winner at the moment. But sentiment and opportunity are not always the same thing. So what I'm going to do today is I'm going to compare 2 Brisbane suburbs with 2 Melbourne suburbs. We're going to have a look at strictly data. The first suburb we're going to run through today is a Brisbane suburb called Woodridge. Now, it is in the Logan area, and that is south of the Brisbane CBD. So if we have a look, the current median price is $781,000. So still an affordable suburb. We've got the 5-year growth though, 174%, which is absolutely incredible. If you think about it, you bought 5 years ago, your property has done 174% growth. The 1-year growth, it's still going very strong. It's almost at 19% for 2025. The days on market is extremely tight. So it's 24 days. So things are moving really fast. Stock on market, incredibly tight as well, 0.33%. So very tight market. Vacancy rate, 1.46%, which means you're not going to have too much trouble getting a tenant. It is ticking up a little bit, but overall solid. The affordability. Now, what we like to say is anything under 40 years, or 35 really, but up to 40 is affordable for local residents. Woodridge is tracking at 61 years. Now, 10 years ago, it was in the 30s, right? So you can think about it. The suburb, although 781,000 doesn't sound too high medium, it is starting to become unaffordable for locals. Now, the system that we use, HTAG, gives a capital growth score. So Woodridge is sitting at 8 out of 100, which is quite incredible when people hear that, because it's a suburb in Brisbane, the area with the strongest sentiment where everyone wants to buy. The capital growth is sitting at 8 out of 100. Now, the biggest misconception with capital growth is when you're buying investment property, you're not buying the past growth, you're buying the future growth, right? So that is just something to keep in mind. So what I'm seeing here is the market's still strong, right? We've got low days on market, we've got low stock on market, low vacancy rate, but there has been an exceptional amount of growth and the affordability is starting to become a problem. Now, let's look at Inala. So it's located 27 kilometers south of the CBD. Median price here is $897,000, so it is a little bit higher. 5-year growth, exceptional, as we'd expect, 124%, which is incredible. The stock on market, even tighter, 0.11%. Days on market, 27 days, so things are moving really quickly. Vacancy rate 0.8%, so almost nothing there for rent. The affordability though, 73.9 years, which is incredible. One of the highest that I've seen, which basically means it's one of the most unaffordable that I've seen. And as a result, the capital growth score is 11 out of 100. So very similar picture to what we're seeing in Woodridge. We've got a really strong market. It's performed exceptionally well over the last 5 years. The market is still strong. We've got low supply, we've got very high demand, low vacancy rate, but what we're seeing is it's starting to become unaffordable. And as a result, it's getting a very low capital growth score. So now we've looked at 2 Brisbane suburbs strictly on the data. Let's see how that compares to Melbourne. So I picked an area called Hoppers Crossing, which is 24 k's give or take southwest of Melbourne CBD. The median price here is $781,000. So I picked it because it's very similar to Woodridge. The 5-year growth is 21%. Now compare that to 174%. Quite incredible how much of a difference there is. The 1-year growth has been basically flat, so it's a 0.65%, so it's hardly grown the last year. The days on market is 24 days though, so you can see the market is starting to get quite strong. The stock on market is 0.17, so it's actually tighter than Brisbane. The vacancy rate is a little bit higher. It's at 3.73%. Now, on the ground, I'm seeing that starting to tighten and rental stock is starting to go quite quickly, but there is a little bit of delay with prices versus rental. So the affordability is sitting at 42 years. So when we compare this to the 70 years in Woodridge, it's nearly half price. And as a result, the capital growth score is getting 87 out of 100. Just to put it in context, anything over 50 or 60 is good. We're looking at 87 out of 100. Well, that is more than 10 times the capital growth score of Woodridge. So if we have a look at Hoppers Crossing versus Woodridge, Melbourne is starting to look very good. Now, let's see if it was a fluke or we'll have a look at another suburb. So I've picked another suburb here, Cranbourne West. Now, that is 50 kilometres to the southeast of the Melbourne CBD and is part of the city of Casey. Now, the median suburb price there is $771,000, so very similar to the Brisbane ones. The 5-year growth has been 32%, so a little bit higher than Hoppers Crossing, but well under the Brisbane suburbs that we looked at. The 3-year, just 6.4%, so you can see it's done hardly anything in the last 3 years. The stock on market, though, is very tight, 0.16%, so you can see the market's starting to really tighten. Days on market, 24 days, so super strong. Vacancy rate, 2.23%, so getting a little bit better than Hoppers Crossing. The affordability, the lowest out of the 4 suburbs, 37.6 years to own. And if you compare that to the 70 years I spoke about in Brisbane, it's just over half, which is incredible. So that means a local buyer in Cranbourne West is going to take 37.6 years to pay off their home loan, as opposed to someone in Woodridge that would take 70 years. So you can start to see where the value sits. As a result, the capital growth score in Cranbourne West is getting 81 out of 100. All right, so if we compare that to 8 and 11 out of 100, it's incredible how much of a difference it is. So if you have a look at the comparisons on the, just strictly looking at the data, you can see that Brisbane has way outperformed Melbourne, but as a result, it's becoming very unaffordable. And the question is, how much does it have in the tank? Well, according to the capital growth scores, not that much. Whereas if you look at Melbourne, it has been a very poor performer over the last 5 years. The market's starting to get a lot stronger. And as a result, its future is looking very solid. Now, here's where things get really interesting. Let me take you back in time. In 2008, Brisbane had just come off a very strong few years and Melbourne had done almost nothing. Does that sound familiar? Fast forward 10 years though to 2018, where Melbourne's median price point was now $161,000. It had done 137% growth in that decade. Brisbane, on the other hand, the median was $567,000. It had only done 58% growth in that time. And in fact, some suburbs were flat and had almost done nothing. So in other words, the last time that Brisbane overtook Melbourne or became the same price as Melbourne, the following 10 years, Melbourne way outperformed Brisbane. So they say history doesn't repeat, but it does often rhyme. So let's see if that plays out. So which city wins? Well, for me, in 2026, Melbourne is clearly the winner over Brisbane. And the main reason for that, it's much earlier in its growth cycle. Although it's not as hot as Brisbane may be right now, you can see the signs that it is starting to warm up quite quickly and has a lot of room for growth ahead of it. Brisbane has had an incredible run, but at these price points, with that level of local unaffordability, it is becoming a riskier purchase in 2026. Melbourne, yes, the sentiment is flat and it is a contrarian move to buy down there as opposed to Brisbane, but that's exactly where the opportunity lies. Now look, if you own a property in Brisbane or if you just bought something in Brisbane, don't freak out. It's still a very strong market. I'm not predicting that Brisbane's going to crash or anything major is going to happen. I'm just saying that majority of its growth has already occurred. But if you're asking me where to put fresh capital in 2026, Melbourne is the pick for me. The sentiment is clear, the cycle favours it, the value is clear, and when the sentiment shifts, and it will, you will already be in the market. Imagine if you could go back and buy in Brisbane in 2020. Well, that's how I see Melbourne today. So if you want help buying high growth, high cash flow properties all across the country, get in contact with Compound Property Buyers Agency, link in the description below. Happy investing.